Good morning. My name is Lee. Coming to you at the wee hours of the morning from Fort Campbell Army Airfield, as this month I'm on third shift, the graveyard. So we're going to delve into the fun world of accounting and finance for Air Lease Corporation and aircraft leasing. So here's our balance sheet. This is going to be basically our assets, our liabilities, owners, equity, which in this case is the shareholders, and how we're going to come out on top. So as you can see, here's their total number of assets. It's going to equal like almost $30.5 billion worth of assets. Liabilities, we have about coming in at a little over $23 billion. That's going to, and the shareholders' equity is going to be a little over $7 million. So basically what this means is that the total assets are going to equal the liabilities, which is the 23, and plus the shareholders' equity, which is the 7, which is going to give you the 30 billion. Here's a representation of their cash flow, operating costs, as you can see, in the figures of about $1.7 billion. They did over almost $2.8 billion in investing with their monies, and they have about $715 million in financing. So this gives them an overall cash loss of $315 million. Now you think that would be a bad thing, but not necessarily. So here's our revenue and expenses. This is going to be the net, which is going to give you the net income, and this is going to tell you whether we've made a profit or not. So as you can see from the revenues, with almost $2.7 billion in revenues. Expenses, you had a total of about $1.9 billion worth of expenses. And then what I can't forget to mention, because the government always gets its share, about $139 million in taxes. So after you take the expenses away from the revenues, you're left over with a positive net income of about $614 million. That's profit. So, in summary, this is the quote I took from the book. Basically, because aviation is such a volatile field, according to the book, 10 to 15% is a pretty good profit level that you want to be at. If my calculations were correct, and I'm not an accountant by no means, I would take Air Lease's profitability to be at 20, their net profit levels to be at 22.8%, which is pretty good because they're above industry standard. But as the book also said, profit is not all about money. And here's a graphic I took off their website. As you can see, 875 aircraft with 119 customers in 62 countries. Yes, they sell aircraft. Yes, they lease aircraft. They make money. But I see this as they are giving the ability to the not so fortunate countries, maybe not the right wording, but the best way I can word it, to own and operate their own airlines without having massive amounts of inventory and capital. That completes this week's presentation. As always, here's my references, and thank you for your time.